We are breaking down this week's election, but the reality is that the markets were moved much more by the inflation data that came out this past week. Appears to show that maybe inflation has peaked. The latest reading, 7.7, that's down quite a bit from the July reading that was about 8.9%. So ultimately, the markets engaged, as they have been for many, many months now, in this battle between inflation and interest rates, right? Remember, if inflation is high, you have to keep raising interest rates in order to sort of try and get that under control. But the impact of raising interest rates is always that you're trying to slow the economy. So what that means is that companies aren't going to be as profitable. So when it starts to kind of help to balance out, if you will, meaning that if you see an improvement in inflation, lower reading numbers, well, then the market gets excited that maybe the Federal Reserve doesn't have to raise rates at the pace that it has been raising rates at. And obviously the markets responded pretty dramatically. Also layered into that was an announcement out of China loosening up some of its COVID policies. So the markets had their single best day in more than 2 years this past Thursday. For the week that was, the Dow was up about 4%, the broader based S&P 500 up about 6%, and then the NASDAQ, which is typically more those tech companies, was up 8%. In fact, the NASDAQ between Thursday and Friday had its biggest two-day gain since November of 2008. So pretty interesting in terms of the market's perception of how those higher interest rates ultimately affect those tech company earnings. Tech companies typically borrow a lot of money. It's a capital intensive type of business. And so when you borrow money, you want that rate to be as low as possible. Otherwise, you've got a bigger expense, and then that cuts ultimately into profit. So certainly some interesting developments this past week. Yes, of course, there was an election. It appears that the Democrats will retain control of the Senate. Republicans will have control of the House, but the margins are very, very skinny. So anyway, watch the inflation data. That is obviously the most important thing. It certainly was the most important thing for the markets this past week. So welcome to the program. This, of course, is Dollars and Cents, where we help you make sense out of all of life's decisions involving your dollars. Hosted all these many years by your friends at Nelson Financial Planning. As we mentioned at the top of the show, we recently were announced as a two-time winner of the Best Financial Planner, the People's Choice Award for the Best Financial Planner on the local program Best of Central Florida with Justin Clark. If you're interested in seeing us accept that recognition and be interviewed, that's going to be on air on your local CBS Channel 6 station next Saturday at noon. So make sure you check us out there. So speaking of things that happened also this past week, we've got to get to this story because it seems like it is blowing up pretty dramatically. And I think it underscores risk, reward, speculation versus more traditional types of investing. And what we're talking about, of course, is this FTX crypto fiasco. And when I started sort of putting some thoughts together for the program as that was occurring on Thursday, Friday, I thought this is pretty bad. And then lo and behold, some additional news came out yesterday that made it even worse. So let's talk about who FTX is for those of you who may not recognize them. They are a cryptocurrency exchange. They spent a ton of money on marketing. When I say a ton, crazy amount of money on marketing. Their name was on the Miami Heat arena until yesterday when they were declared bankrupt, and then the Miami Heat said, I don't think you're going to be able to pay for this going forward, so we need to go find a new named sponsor for our arena. Also a very heavy celebrity endorsement kind of thing. Like it seems like a lot of these crypto exchange companies are leaning heavily into that celebrity endorsement stuff. So with FTX, it was the likes of Tom Brady, who we talked about earlier in the program. That's why the show is not on our sports radio network, because the Bucks are playing in Munich, kicking off probably about in the next few minutes. So Tom Brady was part of the celebrity endorsers. It was Steph Curry. It was Shaq. It was the guy from Shark Tank, Kevin O'Leary. I mean, it was pretty dramatic in terms of the number of celebrities that they had on their roster to promote their cryptocurrency exchange. And in fact, there's a lot of talk in the media online about this particular piece of the equation, but they spent millions of dollars on a Super Bowl ad. The Super Bowl ad featured Larry David, who is co-creator of Seinfeld, also is on Curb Your Enthusiasm. And it's as with all Super Bowl ads, right? They have a tendency to be somewhat entertaining. So have a very recognizable person, a comedian, and the ad goes through different inventions throughout the course of time, like the wheel, the light bulb, things like that. And at each one, Larry David plays this guy who says, I don't think that's a very good idea. I don't think that's a very good idea. The last one, and if you Google it, you can find the ad pretty easily online even now. The last one is somebody explaining to Larry David in sort of present day that about FTX and its crypto and all that. And then, to continue the bit, if you will, in the ad, he's like, I don't think so. There's a lot of folks that are thinking that maybe that ad may have had a lot more truth to it than most advertisements these days. Certainly, if you are a regular listener, you know our view on this crypto stuff. Been saying it for years. Highly speculative asset class, nothing really backing it, whose value is only what it says. And frankly, for us, the tipping point in all of this analysis was, in fact, that Super Bowl ad, along with a number of Super Bowl ads that were airing this past Super Bowl that were all about crypto. And the reality is that, I guess, as we described it earlier this year, that there is a Super Bowl ad indicator. If you listen to the program on a regular basis, we talk about the Super Bowl winner market indicator. Well, I've got a new one now. It's the Super Bowl ad indicator. And if you are sitting at home watching the Super Bowl, you see a bunch of ads for kind of the same thing, and it's all companies that you've never really heard of, or it's new, then that's probably a bad sign. We saw something exactly like that play out in January of 2000, right at the apex of that dot-com bubble. So watch out for the Super Bowl ad. Still a few months away, I guess 3 months away. So we'll see what new ads are on there. But here we are. And this FTX stuff, guys, is a real mess. They filed for bankruptcy on Friday. It's unlikely or highly questionable whether depositors are actually going to see any of their deposited money. Estimated $16 billion in assets. The reality is it was doing some funny stuff with its accounting, using billions of customer assets to secure loans to its affiliated entity, Alameda Research, that at last count owes FTX like $10 billion. So you got like a company, you're like loaning to a company, and it's a sister company. It's just unbelievable. We're going to take a break. When we come back, we're going to wrap up this FTX thing and really drive the point home of why you need to be very careful when you're investing in the next big thing, that it's not just all smoke and mirrors. Coming up here on the program, Dollars and Cents with Joel Garris of Nelson Financial Planning.